everyone, I am Dr. Durdana Ovais from Department of Commerce, the Bhopal School of Social Sciences. Today, let's start this video lecture with a situation analysis. The situation is, Mr. Sharma, a retired employee, has lived in an independent house with his wife for the past 35 years. His two sons, both of whom have been established very well in abroad, have no plans to come back to India, to their own country. And so, the couple, both in their 60s, do not want to live in a strange country with their son abroad. Mr. Sharma, who has a heart condition, and his diabetic wife have a high monthly medical bill. He is dissatisfied with his current pension and do not want to rely on his sons for home and other medical expenses that will come in front of the two people. Can he do anything about it? Well, the answer lies in a scheme called as reverse mortgage. Let's understand what this reverse mortgage is in this video lecture. In the last 45 years, the society has undergone huge changes. Nuclear families have replaced joint family system. Even the system of family supporting their older people have changed a lot. Moreover, the public pension system has not been able to provide an alternative support to old people. And this have left the older generation in a state of insecurity. They constantly fear that they may outlive their retirement income. They may have to depend on their children to help them pay the expenses. They fear of getting sick and having no way to bear the expenses. Moreover, there is also a fear of not being able to guarantee an income for their spouse after they have gone, and also being able to live as long as they like in their own home. This fear is resolved by reverse mortgage scheme. Reverse mortgage tries to solve this problem and create an opportunity to generate income from the very home that is owned by them. A reverse mortgage is an ideal option for senior citizens who require regular income. In a word, a reverse mortgage is a loan. It is the opposite of a conventional home loan. It enables a senior citizen to receive regular stream of income from the lender, which can be a bank or a financial institution, against the mortgage of their home. The borrowers, that is the individuals who are pledging the property, continues to reside in the property till the end of their life and also receive a periodic payment on it. So, it is a different kind of loan. As such, it can be said that reverse mortgage is a different type of a loan which is different than the conventional home loan. Here, the loan is based for homeowners who are provided a living expenses through the loan. Also, the homeowners should be 62 years of age or above, and this loan supplements your retirement income. As such, the reverse mortgage loan can be said to have the following characteristics. The first characteristic is the reverse mortgage is a type of loan for senior citizens aged 62 and older. Secondly, reverse mortgage loans allow homeowners to convert their home equity into cash income without any monthly payments. Thirdly, most reverse mortgages are insured. And fourthly, reverse mortgage can be a great financial decision for some senior citizens who face a financial crunch. A reverse mortgage can be a good way to supplement one's retirement income. So, how does it work? When a home is pledged, its monetary value is arrived by the bank on the basis of demand for the property, current property prices and the condition of the house. The bank then disburses a loan amount to the borrower in the form of periodic payment after considering a margin for interest cost and price fluctuation. The periodic payments are also known as reverse EMI, as they are received by the borrowers over fixed loan tenure. With each payment, whether monthly or quarterly, the equity of individuals' interest in the house decreases. And with reverse mortgage, instead of homeowners paying or making the payment to the lender makes a payment to the homeowner. The homeowner gets to choose how they receive these payments and only pays interest on the proceeds that are received. The interest is rolled into the loan balance so that the homeowner doesn't have to pay anything upfront. The homeowner also keeps the title of the home. Over the loan's life, the homeowner's debt decreases and home equity also decreases. Now, what is this equity? Your equity is the share of your home that you own versus what you owe on your mortgage. For example, if a house is worth of 30 lakhs, right? The home is worth of 30 lakhs and you have a mortgage balance of 15 lakhs. Then you have an equity of 15 lakhs or 50%. Now, the next question that comes is regarding the settlement of reverse mortgage. The reverse mortgage loans become due when the last surviving borrower dies or if the borrower chooses to sell the house. A reverse mortgage loan gives two options. The bank first gives an option to the next kin to settle the loan along with accumulated interest without sale of property. If the next of the kin is unable to settle the loan, the bank then opts to recover the same from the sale proceeds of the property. An extra amount after the settlement of loan with accrued interest and expenses through the sale of the property will then be passed on to the legal heirs. If the sale proceeds are lower than the accrued principal plus interest amount, the loss is borne by the bank. This loss could happen in case where the bank's original estimation is not in line with the real estate market value. Now, one most important question that comes: why reverse mortgage? Yes, because there are certain advantages to reverse mortgage. The first is flexibility. The reverse mortgage is a tremendously flexible product that can be utilized in a variety of ways by the household who have a financial need, and this need can be tailor-made according to their financial requirement. Next, you can stay in your home and improve your immediate finances. The key to reverse mortgage is that it enables you to live in your home for as long as you want with absolutely no mortgage payments, and in many cases, you can also get access to money to use for any purpose that you like. Thirdly, there is low risk of default in case of reverse mortgage loans. Unlike a home equity loan, with a reverse mortgage loan, your home cannot be taken away from you for reasons of non-payments. There are no non-payment on loan until you permanently leave the house. Fourth, there are no downside. With reverse mortgage, you will never owe more than your home's value at the time the loan is repaid. Even if the reverse mortgage lenders have paid you more money than the value of the home, This is a particularly useful advantage if you secure a reverse mortgage and then the home price declines. Next, it is tax-free. A reverse mortgage loan is typically tax-free, whether you receive it as a fixed income or in a lump sum. Also, there are no restrictions. No restriction as to how you use the funds that you receive from reverse mortgage. It is totally up to you. You can go traveling or get a hearing aid or use it for medical expenses, or you can use for purchasing long-term care insurance or paying for your children's. There is absolutely no restriction on how you use the money that you receive. Next is, it has a flexible payment option. Depending on the type of loan you choose, you can receive the reverse mortgage loan money in the form of a lump sum, annuity, credit line, or any combination of the given alternatives. Next benefit is home ownership. With a reverse mortgage, you retain the home ownership and the ability to live in your home too. As such, you are still required to keep up with the insurance and property tax and the maintenance of your home. Next is a guaranteed place to live. You can live in your home as long as you want. With all the advantages, there are certain disadvantages too to reverse mortgage. The first disadvantage is the high fees. The upfront fees, that is the closing and the insurance cost and the origination fees for a reverse mortgage, are considered by many as somewhat quite high. Secondly, the accumulating interest. The interest that is paid by the owners are accumulated and paid at the end. So that again adds to the cost. Thirdly, sometimes it is observed that not enough cash can be tapped. If you have a lot of home equity, you might be frustrated that a reverse mortgage only enables you to use some of it. And lastly, it seems complicated. The basic of reverse mortgage scheme can seem foreign to some people, because it is totally opposite of a normal home equity loan, and that might frustrate people. So that was all for today's video lecture. Keep learning, keep growing.